If you are presently receiving Social Security benefits, Timothy needs you to halt everything else you are doing for the next several minutes and remain with him because right here in June 2026, there are three specific financial changes occurring that directly impact your monthly payment, your tax return, and your prescription medication expenses. Most seniors Timothy hears from have either not discovered all three of these changes or have heard about them without comprehending the one particular action required to actually capture the full advantage of them. Timothy is not discussing things that might benefit you at some future point. He is talking about real dollar amounts that are either already deposited in your account or waiting to be claimed because a single form was never submitted or one number was never verified. Timothy has spent more than a decade researching retirement benefits, senior tax programs, and the financial rules that affect older Americans every single year. And right now, in June 2026, the combination of these three changes for the right household can add thousands of dollars per year in net income on a permanent basis. Now, before we get into the specifics, Timothy wants to ask you something directly. Have you subscribed to US Updates Hub yet? If not, tap that subscribe button right now and activate the notification bell. Here is why that matters specifically to you. Social Security regulations, Medicare rules, and tax laws affecting seniors shift on a regular basis. And when they shift, nobody mails you a letter explaining what it signifies for your personal situation or what steps you need to take. US Updates Hub covers every single change in plain language the moment it occurs. If you are not subscribed, the next update that could deposit real money in your pocket will pass you by without you ever knowing it existed. Subscribe now and let Timothy walk you through these three changes together. Here is what we are covering today. Change 1 involves the cost of living adjustment that arrived in January. Most seniors discovered that their actual deposit increase was considerably smaller than the headline percentage suggested. And for a specific group of seniors currently paying a Medicare surcharge, there is one form that can recover that lost ground permanently beginning within 60 to 90 days of submitting it. Change 2 involves a tax deduction that took effect on your 2025 return. If your tax preparer applied it correctly, you have already received the benefit. If they did not, a refund with your name on it is sitting in the IRS system right now, waiting for one amended form to be filed. Change 3 is the one that carries the most urgency specifically in June. It involves your prescription drug costs and a spending cap that resets every January. Right now, the midpoint of the year is the exact moment this review needs to occur. And Timothy is going to walk you through precisely what to do. 3 changes, 3 actions. Let us begin with your January deposit and the number most seniors never examined closely enough. Timothy wants to ask you to do something directly, and he wants you to actually follow through on this right now. If you can pull up your January 2026 Social Security deposit on your phone or your bank statement, then find your December 2025 deposit as well. Look at both numbers side by side. What is the difference between them? For most seniors, that difference was not what they were expecting. And here is exactly why. The 2026 cost of living adjustment was announced as 2.5%. For the average recipient receiving approximately $2,150 per month, that translated to a gross increase of roughly $56 per month. That is the number that made the headlines. That is the number most seniors were anticipating in January. But the Medicare Part B premium also increased at the exact same time, rising from $185 per month in 2025 to $228.90 in 2026. That is an increase of $17.90 per month. And because Part B premiums are automatically deducted from your Social Security payment before it ever arrives in your bank account, that $17.90 came directly out of your cost of living increase before you saw a single dollar of it. Your actual net deposit increase for the average recipient was approximately $30, 8.10 per month, not $56. The Part B premium rose at a rate nearly 3.5 times faster than the cost of living adjustment itself. That represents the second highest Part B premium increase in program history. So, while the headline figure said 2.5%, what most seniors actually experienced in their January deposit was closer to 1.9% after the Medicare premium was subtracted. Write your two numbers down right now. January 2026 minus December 2025. That difference is your real net cost of living adjustment. Keep that number in mind as we continue today because it connects directly to what Timothy is about to show you. Now, here's something that very few people explained clearly when this premium increase was announced, and Timothy wants to make certain you are aware of it because it may apply directly to your circumstances. There is a provision in Social Security law called the Hold Harmless Rule. Under this rule, if you are enrolled in both Social Security and Medicare, and your Part B premium is automatically deducted from your check, your Part B premium increase in any given year cannot exceed your actual dollar cost of living increase. In plain terms, the Medicare premium cannot reduce your net Social Security payment below what you received the month before. For approximately 1 million seniors whose individual cost of living dollar amount was smaller than the $17.90 premium increase, this protection was applied automatically. Their Part B premium increase was capped at exactly their cost of living dollar amount, shielding their net check from going into negative territory. If your Social Security benefit is on the smaller side and your 2.5% adjustment produced less than $17.90 in gross dollar increase, you may have been protected by this provision. The way to confirm this is to compare your January deposit against December. If your net change was smaller than expected but your check did not decrease, the hold harmless rule may have been working in your favor. If something appears off, or you are uncertain, call the Social Security Administration directly at 1-800-772-1213 and ask specifically whether the hold harmless provision was applied to your account for 2026. Now, for the group of seniors where this matters most, if you are currently paying an IRMAA surcharge on your Medicare premium, the net impact of this cost of living adjustment was even smaller. And for many of you, there is a form that can change that beginning within the next 60 to 90 days. Let Timothy explain what IRMA is for anyone who has not encountered it directly. IRMA stands for Income-Related Monthly Adjustment Amount. It is a surcharge that Medicare adds to your standard Part B premium if your income 2 years prior exceeded certain thresholds. The first IRMA tier in 2026 begins at a modified adjusted gross income above $106,000 for a single filer. Tier 1 adds $81.10 per month to your Part B premium on top of the standard $228.90. Tier 2 adds $24.40 per month. Higher tiers increase significantly from there. Here is a specific situation Timothy wants you to consider carefully. Your 2026 IRMAA charge is based on your 2024 tax return. If your 2024 income was higher than your present income because you were still employed, had a one-time income event, sold a property, or received a large retirement account distribution, you are paying a surcharge right now in June 2026 based on a financial picture that may no longer reflect your reality. That is money leaving your Social Security deposit every single month for income you are no longer earning. The form SSA 44, available at no cost at ssa.gov, allows you to report a qualifying life-changing event and request an immediate recalculation of your Medicare premium based on your current income rather than the 2024 figure. Retirement is specifically listed as a qualifying event. Reduction in work hours is listed. Loss of pension income is listed. Death of a spouse is listed. If any of those events occurred in 2024 or 2025, and your income declined significantly as a result, submitting the SSA 44 this week can eliminate a surcharge that is currently reducing your net monthly deposit by $81 to over $400 per month. Every month you do not file is another month of that overpayment. You cannot recover those funds retroactively. When you submit the form, bring documentation of the qualifying event. For retirement, that includes your final pay stub, a letter from your former employer confirming your separation date, or your pension benefit statement. For other qualifying events, bring whatever documents demonstrate the income change. Submit the form in person at your local Social Security office or by certified mail. The premium recalculation typically takes effect within 60 to 90 days of submission. One more thing Timothy wants you to understand about IRMAA that catches people off guard every year. Some seniors assume that once they filed their 2025 tax return showing lower retirement income, Medicare would automatically recalculate their 2026 premium. That is not how the process works. The 2-year look-back rule means your 2025 return affects your 2027 premiums, not your 2026 premiums. The SSA 44 is the only mechanism that triggers a recalculation before the normal 2-year cycle would produce the adjustment on its own. If you are paying an IRMAA surcharge and your income has dropped since 2024, the SSA 44 is not optional. It is the form that returns your money. File it this week. Change 2 is the one Timothy hears about most frequently from seniors who filed their 2025 return and have no idea whether they received it or not. And if your preparer missed it, there is a refund with your name on it sitting in the IRS system right now. But before Timothy gets into it, he wants to say something to you directly. The fact that you are still watching right now tells Timothy something important. Most people scroll past videos like this one. They see the title, they click, they watch for 2 minutes, and then they move on. You stayed. That tells Timothy you take your finances seriously and you understand that knowing this information is what separates money in your pocket from money left uncollected. So, if you have not subscribed to US Updates Hub yet, do it right now. Tap that button and turn on the bell, because what Timothy is covering in Change 2 and Change 3 today are exactly the types of updates that most seniors discover 6 months too late. You are here early. Stay subscribed. So that remains the case. Now, the Senior Bonus Deduction. The One Big Beautiful Bill Act established an additional federal tax deduction of $6,000 for every person who is 65 years of age or older. For married couples where both spouses are 65 or older, that combined deduction totals $12,000. This deduction applies to your 2025 tax return, the one most seniors completed earlier this spring. Here is what makes this deduction different from anything that came before it. It stacks on top of your existing standard deduction and on top of the additional senior deduction that was already written into the tax code. You do not have to choose between them. You do not have to itemize to claim it. It is available whether you take the standard deduction or itemize, and it reduces your taxable income from the top down. The deduction begins to phase out at a modified adjusted gross income of $75,000 for single filers and $150,000 for married couples. If your income falls below those thresholds, the full amount belongs to you. If your income sits near those boundaries, a portion of the deduction remains available depending on exactly where you land. Now, here is the part most people explaining this deduction are getting wrong, and Timothy wants to make sure you have the full picture. The straightforward calculation looks like this. A single senior in the 22% federal tax bracket who shelters $6,000 of taxable income saves $1,320 in direct federal tax. For a married couple in the same bracket, $12,000 of deduction saves $2,640. Those are meaningful real dollar amounts, but for a significant number of seniors, the actual benefit of this deduction is considerably larger than those face value calculations suggest. And the reason connects back to the provisional income formula that determines how much of your Social Security benefit is subject to federal tax. Let Timothy walk you through this with a specific example so you can see exactly how it functions. Suppose you are a single filer. Your pension income is $18,000 per year. Your Social Security benefit is $18,000 per year. Your provisional income, which equals your adjusted gross income plus tax-exempt interest plus 50% of your Social Security, comes to $27,000. That places you above the $25,000 single filer threshold, where 50% of your Social Security becomes taxable. You are paying federal income tax on $9,000 of your Social Security benefit. Now apply the $6,000 senior bonus deduction. Your adjusted gross income drops by $6,000. Your provisional income falls to $21,000. That is now below the $25,000 threshold. Your Social Security is now entirely tax-free. The direct tax savings from the $6,000 deduction at 22% amounts to $1,320. But eliminating the tax on $9,000 of previously taxable Social Security at 22% saves you an additional $1,980. Your total benefit from one $6,000 deduction is $3,300, more than double the face value calculation. This multiplier effect applies to anyone whose provisional income was near those thresholds. The closer your provisional income was to $25,000 as a single filer, or $32,000 as a married couple before the deduction was applied, the more powerful the combined effect becomes. And if your preparer ran a standard calculation without fully understanding this interaction, they may have correctly applied the deduction but never explained to you how much more it was actually saving you. Here is where Timothy needs you to take one specific action right now. Today, not this weekend, today, go find your 2025 federal tax return. It is either on file with your preparer, in your email if you use tax software, or you can request a transcript at irs.gov using the Get Transcript tool, which is free of charge. Open it and look for the senior bonus deduction. The amount should appear as a $6,000 deduction if you are single and over $65,000 or $12,000 if you and your spouse are both over 65. It will appear as a separate line item, reducing your adjusted gross income. If you see it, your preparer applied it correctly and you received the full benefit. If you do not see it, you have a refund waiting. Call your preparer this week and ask specifically, was the enhanced senior deduction of $6,000 from the One Big Beautiful Bill applied to my 2025 return? Not a general question about deductions, that precise question about that specific provision. A preparer who is current on 2025 tax law will answer immediately and with specifics. If they hesitate or say they are unfamiliar with it by that name, ask them to pull up your return and show you the deduction line. If the deduction was omitted, the correction is Form 1040-X, the amended return form. Filing a 1040-X to add the senior bonus deduction is a straightforward amendment. The window to amend a 2025 return does not close until April 2029, which means you have time. But Timothy wants to be direct with you about something. Every month you wait is another month that refund sits in the IRS system instead of your bank account. If you are owed $1,320 or $2,640 or more, that money begins working for you the day it arrives, not the day you eventually get around to filing the amendment. And there is one additional action connected to this deduction that directly affects your monthly Social Security deposit going forward. If you are currently withholding federal income tax from your Social Security check using Form W-4V, recalculate your actual 2026 tax liability after applying the $6,000 senior bonus deduction. For many seniors, the deduction reduces their federal tax liability significantly, sometimes to near zero. If your liability has decreased but your withholding rate remained unchanged, you are prepaying taxes every single month that will come back to you as a refund 12 months from now. Adjust your W-4V today and keep that money in your monthly deposit where it belongs. Change 3 is the one that carries the most specific urgency right now in June 2026. And before Timothy explains it, he wants to ask you to do one thing. If you have a parent, a sibling, a neighbor, or a friend who is on Medicare and takes prescription medications on a regular basis, Timothy wants you to bring that specific person to mind right now. Keep them in mind as he walks through this, because what he is about to explain has been in effect since January, and millions of seniors are not taking full advantage of it. By the end of this section, you will know exactly what to tell them, and one conversation from you could save them hundreds or even thousands of dollars before December 31st. Now, the Medicare Part D out-of-pocket cap. Starting in 2025 and continuing through 2026, every Medicare Part D prescription drug plan and every Medicare Advantage plan that includes drug coverage has a firm annual cap on what you pay out of pocket for covered medications. In 2026, that cap is $2,100. Here's what that means in everyday language. Once you have spent $2,100 out of pocket on covered Part D drugs during the calendar year, your cost for every covered medication drops to zero for the remainder of the year. Not reduced, not discounted. Zero. Your plan covers 100% of covered drug costs from that point through December 31st. Timothy wants you to appreciate the full significance of that number. Before this cap existed, seniors taking medications for cancer, diabetes, rheumatoid arthritis, multiple sclerosis, or heart conditions could spend $8,000 or more per year out of pocket on their prescriptions. In 2024, you had to spend $8,000 to reach catastrophic coverage. In 2025, that threshold dropped to $2,000. In 2026, it stands at $2,100. The protection that once required $8,000 of your own money now activates at $2,100. That is a fundamental transformation in how Medicare handles prescription drug costs, and it is one of the most significant improvements to the program in decades. You do not need to enroll in this benefit separately. Your plan automatically tracks your out-of-pocket spending. Once you cross $2,100, the pharmacy system registers it, and your cost drops to zero at the counter. Now, here's why Timothy is specifically addressing this in June and not back in January when the benefit first began. The cap resets to zero on January 1st every calendar year. Every January, you begin accumulating out-of-pocket spending toward the $2,100 limit from scratch. Seniors who take regular higher-cost medications, especially those managing chronic conditions or taking specialty drugs, frequently reach the $2,100 threshold by April, May, or June. Right now, the midpoint of the year is precisely the moment when a substantial number of seniors have either already crossed the cap or are approaching it closely. And here's the problem Timothy hears about consistently. Seniors who have already crossed the cap are still being charged at the pharmacy because they do not know they have crossed it and because they never checked. So Timothy wants you to do this today, not this weekend, today. Call your Part D plan using the member services number on the back of your insurance card and ask one specific question. What is my year-to-date out-of-pocket drug spending that counts toward the $2,100 cap? Most plans also display this information in the online member portal under your benefit summary or prescription history. Request the exact dollar figure. If you have already spent $2,100 on covered drugs this year, every covered prescription you fill from this point through December 31st should cost you nothing at the pharmacy counter. 0. If the pharmacy charges you after you have crossed the cap, call your plan that same day. Do not pay and dispute it later. Call before you leave the pharmacy, if at all possible. Your plan's member services line is required to resolve this situation, and any amount you overpaid must be refunded to you. If you have not yet reached the cap, but take regular medications that will bring you close before year-end, knowing your current total helps you budget accurately for the remainder of 2026 and positions you to confirm when the zero-cost threshold activates. Now, here's an additional piece of this that most seniors have not been informed about, and it directly affects how quickly you reach the cap. As part of Medicare drug price negotiations, the federal government successfully negotiated reduced prices for 10 specific high-cost medications that took effect in 2026. These negotiated prices apply directly to what you pay at the pharmacy and to what counts toward your $2,100 cap. The 10 medications include Eliquis, which is widely used for blood clots, and atrial fibrillation, Jardiance for diabetes and heart failure, Xarelto for blood clot prevention, Farxiga for heart failure and kidney disease, Entresto for heart failure, Enbrel for rheumatoid arthritis and psoriasis, Imbruvica for certain blood cancers, Januvia for type 2 diabetes, Stelara for Crohn's disease and psoriasis, and Fiasp and Novolog insulin formulations. If you take any of these medications, your out-of-pocket cost in 2026 may be lower than it was in 2025 as a result of the negotiated price reduction. That lower cost per prescription means you may reach the $2,100 cap at a different point in the year than you would have without the negotiation. This is a genuine financial benefit that requires no action from you to receive. It is already in effect at the pharmacy, but being aware of it means you can accurately project when you will cross the cap and what your remaining drug costs for 2026 look like. One important distinction Timothy wants you to understand clearly: the $2,100 cap applies to drugs covered under Medicare Part D, medications that are administered in a physician's office, an infusion center, or a clinical setting, such as certain cancer treatments and injectable biologic drugs, are typically billed under Medicare Part B, not Part D. Part B drugs have separate cost-sharing rules and do not count toward your $2,100 Part D cap. If you receive medications through infusion or in a medical facility, that spending exists outside the cap, and your total annual drug cost exposure includes both categories. Understanding which of your medications fall under Part D versus Part B gives you an accurate picture of your complete out-of-pocket drug exposure for the year. Before Timothy moves to the final action checklist, he wants to speak directly to one specific group of seniors watching US Updates Hub. If your income is below approximately $22,000 as a single person or $30,000 as a couple, there is a program through the Social Security Administration that most seniors in this income range have never applied for, and that could eliminate the majority of your prescription drug costs entirely. It is called Extra Help, and it is a federal program that covers Medicare Part D premiums, deductibles, and most copays for qualifying seniors. Seniors approved for Extra Help often pay between $0 and a few dollars per prescription for covered medications, regardless of whether they have reached the $2,100 cap. Many seniors who qualify for Extra Help never apply because they assume the income limits are lower than they actually are or because they have never heard of the program by name. If your income is anywhere near those thresholds, Timothy wants you to make one call this week. Contact the Social Security Administration at 1-800-772-1213 and ask specifically about the Extra Help program for Medicare prescription drug costs. You can also apply online at ssa.gov. June is an excellent time to apply because if you are approved, coverage can begin within a few months, reducing your drug costs for the second half of 2026 and setting you up fully for 2027. If you are not certain whether you qualify, make the call regardless. The SSA will tell you within minutes whether you meet the eligibility criteria. There is no cost to apply, no obligation, and no downside to finding out. The only cost is not knowing. Let Timothy bring everything together right now in the clearest way he can, because everything we covered today on US Updates Hub, the cost of living adjustment reality, the IRMAA form, the senior bonus deduction, the Part D cap, all of it comes down to 3 specific numbers. And Timothy wants you to check all 3 before this week is finished. Number 1, your January 2026 Social Security deposit minus your December 2025 deposit. That difference is your real net cost of living adjustment. If it is significantly smaller than you anticipated, and you are paying an IRMAA surcharge based on 2024 income that no longer reflects your current situation, download Form SSA-44 from ssa.gov this week. Complete it with your retirement date and current income documentation and submit it to your local Social Security office. The surcharge reduction takes effect within 60 to 90 days of filing. Every month you wait is another month of overpayment you cannot recover. Number 2, your 2025 federal tax return. Locate it today and look specifically for the $6,000 senior bonus deduction if you are single and over 65, or the $12,000 deduction if you and your spouse are both over 65. If it is present, you received the full benefit. If it is absent, call your preparer this week and ask specifically whether the enhanced senior deduction from the One Big Beautiful Bill was applied to your return. If it was missed, file Form 1040-X. The refund is waiting, and it will not come to you on its own. Number 3, your year-to-date out-of-pocket Part D drug spending. Call your plan today and ask for the exact figure. If you have crossed $2,100, every covered prescription from now through December 31st cost you $0. If you have not crossed it yet, you now know exactly where you stand and when to expect the cap to activate. 3 numbers, 3 actions. Each one takes less than 30 minutes. Together, they can recover hundreds or thousands of dollars that are either being overpaid, uncollected, or overcharged right now in June 2026. Timothy will see you in the next one. Subscribe to US Updates Hub for more valuable content and updates.